While stocks like Tesla sold off aggressively today, the SP 500 did pretty well until the back half of the day after Jay Powell spoke. And for those of you who do not understand yield curves or inversions, we have an entire video and actually a brief PDF and course over on our Discord community. But basically what happens and why a yield curve inversion is bad is that short-term bonds actually give a better yield or a better return than a long-term bond. And what this does is it makes people, specifically big money who runs the market and moves the market, it makes them usually pull their money out of a very risky market like we have right now and put it into something that will give them 5% in the next 2 or 3 years, guaranteed. And if you're a hedge fund or a whale or somebody that we talk about a lot on this channel when we're following their trades, these people have made a lot of money in the past 4 or 5 years, and they would rather take that capital, put it into something like a bond for 2-3 years, get a guaranteed return, and wash their hands clean, come back, see what the economic situation is in a couple of years. So looking at the S&P 500, first thing you're going to notice, just like we said before, is that we're not actually fully in a downtrend. We're kind of sitting here in a wonky level. We're under the 200 SMA on the 4 hours, so we are technically not in an uptrend. The 11 SMA we're currently over, and the 50 we're over. In this instance, we actually broke through 438 and 440, and we have a major resistance level. The 200 SMA is a very strong support. Keep going back, you'll see that we've been using this as a support back in March of this year, ever since we broke back up above it. So the fact that now we've pulled down, came back up and tested the 200 SMA, retraced again, bounced and tested this SMA again, it seems that we're probably going to reject. This would actually normally be considered a bullish move to the upside, but because we're trading under the 200 SMA and there's a massive bearish order block sitting here, there's no way in hell I'm going to be taking this trade long. Something else that's notable is going to be the 2 volume gaps or price gaps sitting here basically between $433 and $430, as well as this even further gap down here at about $426.38 to $424. There's a saying in trading that all gaps need to be filled, and it's not that every single one of them always happens, but most of the time they're liquidity zones where big money wasn't able to get into those positions, so they usually revert back down to fill those moves. You can see here as well, which I've been talking a lot about on Tesla, just like Tesla, potential inverted head and shoulders pattern setting up with a neckline at about $440. So if everything moves to the way that I'm expecting, I think we'll probably see SPY move back down to 422/420 in the next couple of weeks. If we bounce from there, we could see them move up to 440 and probably end the year somewhere around where we are right now, and then test in 2024, I think, the move back up to 450. I do have some December puts in my long-term position or my long-term account on SPY, and I do have them on QQQ as well. If this pushes up over 422 and holds, that will be my time to exit out of this position for sure.